Hi everyone, this is Gianni DePoce here with you for TheoTrade, and today is Tuesday, May 6th, 2025, and it's the day before Fed Day, in the middle of earnings season, and with another potentially very big announcement from President Trump coming tomorrow. We'll see what that is. Said that it might not necessarily be on trade, but let's cut through all that noise and take a look here at what's going on with the price action, which is the only thing that pays you, me, and all of us in this market. So let's start off by looking at the S&P 500 futures. We had a pretty weak open so far today, and then a midday rally that has faded thus far. But I was talking about this in the live room today with members and discussing on how the last several sessions that we've seen have been characterized by some early day weakness followed by strong buying into the close. And that's a stark contrast from the market environment that we were in back during the peak volatility in March and into early April. So that tells me that the nature of the trading activity has changed in this tape. Now, could that change again here soon? Of course, but for now, it seems like bulls have been winning out on the majority of days. Market breadth has improved substantially. Are we a little bit overextended here near term? Sure. As a matter of fact, my cash positions in my portfolio have increased over the last couple of sessions. Part of it is, capturing profits on some names, booked a nice gain in Palantir. I'll take a look at that chart with you in just a moment, and getting stopped out in another. So I have a little bit more cash going into the Fed meeting tomorrow, and I'm okay with that. Now remember, when it comes to Fed Day, the day after Fed Day matters more than Fed Day itself. When you have the algorithms going crazy and dissecting every different word that Powell says at the press conference that follows the rate decision, the price action can get a little bit crazy during the day. But the Fed's not going to move tomorrow. What I'm looking at more so right now is what the Fed says for the next meeting. Is Powell going to come out with a dovish pivot for June? And if he does, we could start to see strength and momentum accelerate in the bullish direction again in this market. Now, both yesterday and today, we saw the NASDAQ underperform against the other indices. That's a bit of a cautionary signal to start, but honestly, going into Fed Day, not the worst time, because I can't tell you how many times I've seen it flip either on that Wednesday or that Thursday. But obviously, the Friday close is going to matter the most. But we've had, a string of up days. And during this selling here, what I'm doing is I'm looking for the stocks that are holding up the best in this tape. And believe it or not, there's even stocks making new highs in this environment. You just need to know where to look and how to find them. So I'm looking for what's called relative strength. And we've been talking a lot about chips and semiconductors and the tech sector. The tech sector, XLK, has now emerged as the top performing sector in the S&P 500 over the last month. I cannot stress enough how big that is. Now, last week, XLI industrials were the top performing sector. Not a bad sign in of itself, but I've had a lot of questions and desires for comparisons to the market environment that we are in now back to 2022. And I have the data, I have the notes. That's what I do is on a weekly basis. I take notes, I keep track of the market so I can go back and look and see, hey, are we in a similar environment now than when we were before? And, back in 2022, we saw a lot of leadership coming from the XLE energy sector. And, crude oil having a decent day here today, but still in a downtrend, and XLE still looks very problematic. But what's interesting is that if you zoom out here and look at the longer term chart on XLE, and I actually talked about this live in a joint session with Professor Bierman last week or 2 weeks ago, and we discussed how if you actually go back to the COVID crash low, XLE, the energy sector ETF, actually has outperformed XLK, the technology ETF. That's pretty big, and I think it kind of flies over the head of most traders and investors. So there will come a time for energy, and I think that Powell potentially pivoting and coming out more in a dovish manner could be a tailwind for that to happen. We could have one more washout lower, but what I'm seeing here, what I'm seeing in the tea leaves, is a new showdown on the inflation front. So if Powell starts printing money and cutting interest rates, and these tariffs actually stick, and we do get inflation, it's going to turn into a big policy war, a big policy debate, even more finger pointing. Oh no, the tariffs are your fault, Powell. Oh no, the tariffs are your or the inflation is your fault, Powell. Oh no, the inflation is your fault, Trump. And what I've been, telling members a lot is with energy the way it is, inflation is not a problem. So Powell does have the green light to lower rates from that standpoint. We also had that negative GDP reading last week that came in weaker than expected. That also gives Powell the green light to lower rates. But what doesn't give Powell the green light to lower rates, I'd say it's more of a yellow light, is the stronger than expected labor market. If we see tariffs come in and compress margins for retailers and companies in general, okay, I think the risk for tariffs is not so much inflation, it's more unemployment because you can't force people to buy things. And I think that's getting lost a lot in the conversation. So even if a retailer or a company tries to mark their goods or services up 20% because of tariffs, you can't force people to buy them. And if people don't buy them, well, this is how supply and demand works, guys. We watch this play out on a daily basis in markets. So this isn't, a tacit approval of tariffs, for or against. I just want you to think about these moving parts through the lens of supply and demand. So then if the retailers have to end up eating some of the cost on tariffs, that means lower margins. That means they need to cut expenses elsewhere. And that usually means unemployment is going to rise. So that is, I think, the big danger when it comes to tariffs. But, now that we've seen the majority of the big tech earnings come and go, I would say it's been a rather positive Q1 earnings season for the Magnificent Seven, especially Microsoft. Guys, I cannot stress this enough. When you have a company the size of Microsoft rallying 11% on the week like it did last week, it's really hard to be bearish. It's really hard to be bearish. And we know this market lives and dies by tech. We know that it lives and dies by the Mag 7 especially. And as I look across the Magnificent 7 landscape, Apple's got a little bit of work to do. Meta had some decent responses after its earnings. Google looks better. I think to me, it looks like we're in the early stages of a new round to the upside. Now, Powell could easily spoil this. And while the sector performance rankings are better now than what we saw most recently in 2022, we're not out of the woods yet. We're not out of the woods yet. And I've been talking an awful lot about this high from the 25th of March that we need to take out to the upside in order to give the all clear signal when it comes to the trend. And from a sentiment standpoint, we couldn't be in a better position. It's been said that a bull market climbs a wall of worry. And it's true. It's true. Right now, people are concerned about the economy. They're concerned about the stock market. They're not as interested as they were even just a few months ago. And this provides the cannon fodder for bulls to take this market back to new highs. It's not going to happen next week. It's not going to happen next month. And one of the questions I get a lot too is, hey, are we going to see a V bottom or a W bottom, right? And I've talked about this before. And I think the Fed depends a lot on it. If Powell comes out and he starts to become dovish, and if the Fed is dovish here into the year end, I think we will see a V bottom. If Powell's going to play hardball and not want to lower weights, then we're probably going to see a W bottom. And that doesn't necessarily mean we have to make a new low. We could come back down to this $5,100, $5,200 area. That remains to be seen. But a little bit of backfilling here is not the worst thing that could happen in this market. It's not the worst thing. And it may only be a few days. It may only be a few days. But if we have hit the reset button on some of these cycles that we monitor, okay, we're probably going to see more aggressive buying, and any dips are buying opportunities. Okay. I do want to take a look at China real quick, seeing a nice update there. And, a lot of the names that we've been tracking in that space, NetEase, Alibaba, BYDDY are actually holding up pretty good. I want to take a look at cryptocurrencies here. Bitcoin still consolidating near the highs. It came into this week a little bit overbought. So this is a little bit of a pullback here. I do view it as like a reset, a bit of a consolidation of the gains. That is pretty healthy from my standpoint. Ethereum is lagging some here today, which is a concern. I mentioned how I had captured profits yesterday in Palantir on a rally to 125, booked a 27% gain in the Trinity trade, which was a nice one to take at this point of the market rally. But I obviously want to talk a little bit about gold and silver here, which gold continues to be the strongest uptrend in this entire market. And we're coming off a higher low. Silver is up less than gold now today. I still want to see silver start outperforming on a percentage basis. Gold and silver miners are both up nicely today, and we're actually now just starting to see. Earlier today, it wasn't the case, but you're starting to see silver miners overtake silver spot, and you're starting to see GDX overtake gold spot. And this is a risk on sign. This is a risk on sign. So we added a couple positions in the TheoTrade live room today, and I still have my positions here over in the Trinity trade with Anglo Gold Ashanti up another 3.5% today, and Kinross Gold similarly up about 3.5%. This is actually a back up the truck position for me. KGC made it a bigger position than usual because I like the setup so much. Started buying this one at the end of January. And like I said, like I've been saying, is that the precious metal space has offered the cleanest and most consistent setups in this entire market, especially, if you're more focused on the US market. A lot of these stocks are internationally oriented, but the cleanest setups have been coming from precious metals year to date. So that's not something that we should ignore. And we know the trend is our friend. There was a brief period there where some of the crypto and the overall stock market were starting to outperform metals. That's starting to flip back the other way again. I'm still keeping a close watch on some quantum names here. I like what's going on in some of this space, so we're going to be continuing to monitor that. And obviously, I like Tesla too. Tesla looking for a higher low here. This is a name that we own in the live room, but I think Powell's going to have a big impact on what happens in bonds. I'm looking for a low to form this week. I'm still looking for interest rates to come down, and lower rates usually is good for tech. Usually is good for tech, and I'm looking for tech to assume a role of leadership this year going into the next few months. Again, we're going to have a really tough time continuing to see prices rise if tech is not continuing to outperform. And I think a lot of it relies on inflation remaining tame in the near term, and by extension, interest rates coming down. So that's what I'm watching for tomorrow going into the Fed meeting. Stay tuned. Remember, the day after Fed Day matters more than Fed Day itself. And if you want some trades around earnings season, come check us out here at TheoTrade. Check out Don's earnings flips strategy. It's a great way to take some good short-term trades in this earnings season. So come check it out, guys. Hope to see you in the TheoTrade chat room, and thanks for tuning in. Thank you.